Ladies and gentlemen, I welcome you all to the H1FY25 post-earnings conference call of Cosmic CRF Ltd. Today on the call from the management team we have with us Mr. Aditya Vikram Birla, Chairman and Managing Director, and Mr. Rajesh Sharma, Investor Relations. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to quickly run us through the investor presentation and brief us about the business and performance highlights for the quarter and their growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Okay, everybody, hello, this is Aditya Vikram Birla. Happy Diwali to everyone. Today is Diwali and we are all at a call, so I'm dressed like this because of that. I'll straight away get to the presentation. So Vinay, we can go to straight away to the performance highlights. So there's a message from the chairman, the managing director. We have mentioned as to what has happened in detail. We can read this through, but the main idea that I want to push on, or the point that I want to mention, is last year we had done in H1, the entire year actually, we had performed at around 18,000 metric tons odd, 18 to 19,000 metric tons. Whereas this year, in the first half itself, we have done more than 19,000 metric tons in terms of our complete production and layout. This has actually led us to believe that we had actually proposed to increase our capacity from 18,000 metric tons per annum to 36,000 metric tons per annum. However, with the fabrication part, which is being increased, continuously there's a capex that's running out in Cosmic CRF, along with that in NS. The ongoing capex has allowed us to actually think about achieving 45,000 metric tons by the end of this financial year. If we perform at 90% efficiency also, we will be doing 40,000 metric tons. There's one more. Sorry. Yeah. Okay. So the second point is the NS engineering has been completely taken over since May this year, May 2024. And it's like a marvel to me because it's unheard of. In the next 3 months or 4 months, we're good to start production. As of now, we have already started one of its 6 lines. 6 lines of production are there for manufacturing different products, out of which one line is already in full flow. And it is giving us good kind of turnovers. By the end of this year, I think this financial year, we'll be able to achieve approximately 25% of the total annual capacity. So say the annual capacity should be around 65,000 metric tons. Even if you perform at say 90%, which I presume that we will be able to, by God's grace, we will be in a position to do approximately that, the entire quantum next year. But this year we'll be doing hopefully 25% we'll be achieving on that complete quantum. When I will go to the next slide. The key highlights of the order book, consolidated order book for the entire group today stands at more than 520 odd crores. We've been specific about it because there's a 119 crore order book that we had achieved in NS Engineering, along with the 500 crore order book that we had already had, plus 504 crore order book in Cosmic CRF. This was actually presented almost 2 months back. So since then, 1.5, 2 months back. So since then, we've already achieved 35 to 40 crores that we already executed. There are people who keep asking me as to, do you want, why don't you take more orders? So we can always take more orders. I mean, orders are in plenty available. In the infrastructure sector, there is no dearth of orders. Like there's like L&T, which is personally about to give you an order of say 300 odd crores or 400 odd crores, a single order. But the point is, once you take these orders, you got to execute it. Before, we don't understand the factor that these orders come with a timeline. With railways also, the orders that we always achieve are irrespective of its price and XYZ. We have to execute these orders. Otherwise, there's an LD. There's a late dispatch clause that is attached to your purchase orders where you get you get penalized for late deliveries. That is why this order book stands here. But we will be increasing the order book in the coming months. That's only because the more the NS keeps growing, we will have to have a replenished order book of at least 550 to 600 odd crores at any point of time to keep the entire operations in its safety net. Like I've always been mentioning, that the company keeps growing, should keep growing, and that's my vision and mission statement, that we should keep growing at 100% CAGR every year. On the top lines and bottom lines, it should keep increasing into double to double. If we want to do that, then the math says that the order books will also increase substantially, maybe double up in the next year. The volume growth has shot up to 68%. The point that I want to really highlight more than the fluff that we keep talking about is the turnover. That a lot of people personally ask me as to why is it 169 crores, 170 crores, and why not more? Because last year it was 125 odd crores, if I'm not wrong, right? So what happens is, we had done the same amount, we had done half yearly last year, approximately around 12,000 metric tons. Cut to this year, we've done 20,000 metric tons. The average pricing of the finished product that we were selling was almost 107 rupees 65 paise roughly. And this year, it's almost 78 rupees. The pricing has come down for two reasons. One, the orders that we are getting from the railway board, from the wagon manufacturers, are more mild steel oriented. So the raw material that is required to manufacture the products and the wagons is mild steel in nature, which is basically cheaper in pricing, much cheaper. It's almost half. And the other part is that the steel market, as we all know, has taken a huge hit. So there's almost a 15% correction on the raw material pricing that we've done. Just give me a second. Though that's one more point. So this, if we kind of kind of correlate, then my turnover should have been approximately, if we would have done say 107 rupees. So 19,888 880 tons into 78 into 19,880 tons into roughly 107 rupees would have been almost 220 odd crores. Whereas we've done only 169 crores. That's because of the raw material pricing. The percentage of profits have also shot up for two main reasons. One, because of the pricing. So basically, if you get say 13 rupees as a margin on a raw material or a sales price of 130, vis-a-vis you are getting a 13% or 15% margin, 15 rupee margin on a sale price of 78 to 80 rupees, the margins by default go up. But along with that, that's the peripheral math around it. But away from the arithmetics of it, the main point that has happened is Cosmic has really gone out and fetched for the prototype wagons. Like I've always mentioned that Cosmic is very well equipped to manage and manufacture, probably the only company that can manufacture all types of wagons, all types of CRFs and components for all wagons. That having said that, we have the split roll technology that I've been keep going on talking about in all my forums. And I've said that this has allowed us, and the R&D that we do at our end, that has allowed us to basically fetch these orders which are prototype in nature. What are prototypes? Just to give a small light on that. So basically, when wagon builders, also get private orders or orders from the government as well, from the railway board as well. These orders in its own right are often for solution orientation, right? So it's not like the old wagons that were running over the period of years, like Box and HL, BC and HL, BVCM. These are the regular wagons that were going on over the last 10, 15, 20 odd years. Now we have wagon types like BCFC, which is specifically made to transport cement, which allows the transporter to actually kind of profit from the less of the pilferages are lesser, the discharging is easier, the carrying cost is much cheaper. So that is why these wagons are made. BCFC is another wagon which was a prototype. We were also working with BOSM, which is a new tender that came out, which is something which will replace, which the railway board hopes to replace Box and HL, the old most used wagon for. Cosmic CRF as of now is the only company which is manufacturing BOSM and BCFC. BCFC, there are a couple of companies out of the other peers that have already stepped in and taken a couple of orders. But even then, the supplies are not at the same levels as Cosmic CRF because of the constant capex. Like again, I said, the R&D and the split roll technology, and plus the capacity enhancement, we have been able to supply all sorts of material to the prototype. And that is exactly why our debtor books have also been stretched, because we are getting better margins there because there's no other player there. So it's more like monopolizing that product for that period of time. So we are being able to fetch better margins, and we are trying to execute them faster than the old wagons that we already have. Having said that, we'll also have to execute the old wagons. The percentage of margins are decent there as well. And it's not as buoyant as this, but yes, it's equally good. But that will all get leveraged out, and it'll all get equalized. These margins that we look at today, like for example, the EBITDA margin has grown by 103%. Reported EPS has grown by 111%. Profit after tax has grown by 111%. EBITDA margins have grown by 56 basis points. Cosmic CRF's capacity utilization is at 90%, which is unheard of in an engineering unit, because I've been working for 13 years in various engineering units of mine, and this is unheard of. But the kudos to my team and the entire team of Cosmic CRF that's working day in, day out in the office as well as in the factories, that they've been able to achieve this along with the vision. I mean, the vision is easy to say, but execution is the hard part. And we always believe that, we can say a lot of fluffy and nice things, but at the end of the day, it's all about the execution. The PAT margins have grown by more than 367 basis points. and NS Engineering is working at 25% on its capacity utilization. We can go to the next slide. I've already mentioned it, but I'll just say that the fabrication has allowed us to think about 45,000 metric tons in not just 36,000 metric tons, because the fabrication itself, we used to do it in the outdoors. People would not get the supplies at the right time. There aren't many very legit fabricators around us who can actually quantumize or probably provide that kind of outlay of material, outlay of finished products with that kind of precision. We have been able to create 2 more sheds in our facility in Cosmic CRF Ltd in Singur, and we've been able to bring the in-house fabrication at a world-class level, where we have been able to manufacture everything. So initially we were only manufacturing the CRFs, but now we are being able to manufacture the entire body at large. I mean, it's just the assembly that's left probably. So that's one point. By the end of this year, it's a guidance, but yes, if I look at 25% of the entire 60,000 metric tons and 90% of 45,000 metric tons, we look at 60,000 metric tons of execution, production, and dispatches at the minimum. The next slide. The half-yearly statements have also already been shared. I mean, there's no point reading out numbers, but the revenues are standing at the consolidated level. Revenues are standing at almost 170 odd crores, and the PAT margins are standing at approximately, I think, 18.5 crores. That in itself is a huge buoyancy. Last year we were not even close to this, so it has shot up exorbitantly and substantially. There are a lot of people who would want to ask this question as to whether sustain this or not. I'm hopeful about sustaining this because we have a lot of orders from the prototype versions. Our debtors might be stretched to a certain extent, though I'm trying very hard, and we are putting things in place to bring down the debtor positions as well as the stretched the stretched debtor books. But irrespective, the load up is important for us. I mean, in terms of the raw material, in terms of the forward books, in terms of the advances that we've given to the raw material vendors, the load up is important. If you don't load up, then we will not be able to double up the top line by the end of the year. Having said that, we will. So there's nothing that we don't need to worry about. We'll go to the next slide. I mean, this is something that everybody's read through. Again, this is the same. I mean, the production capacity, I think it's a standalone part, but the revenue from operations stands at 108.6% on the upper side. The EPS has shot up by 43.3%. EBITDA has shot up by 85%. Debt to equity ratio is 0.1x, which is brilliant to my understanding. Profit after taxes gone up by 98.9%, let's say 100%. And the capacity utilization has gone up by 80%, obviously because we're doing a complete capex. And like I said, during my listing also, when I was listing this company, a lot of people asked me that, how much time does it usually take to double up the capacity? We always used to say that we are building and we're executing. So basically the mill that we set up, we want to start executing immediately. That is exactly the motto that we used in the NS. And that is exactly why we could start executing the orders, start taking the orders, and also running the mills immediately. Because NS, when I had bought NS out, there were a lot of mills that were in a very, very bad shape. And a lot of mills were taken out by the ex-promoters. So for us, it was something that we had to literally build and renew the old and refurbish the old mills. But we've been very happy with the fact that we've been able to do it. 25% of it had to come in because I don't believe in loss-making companies, and I personally hate the concept and this word of cash burns. That's not the kind of business that I want to be in. Having said that, it's always a challenge to take up these new companies at half the cost or half the price of what I would have had to pay if I would have to set this up ground up. That is the advantage. But yes, the hard work that goes into setting it up and then obviously turning it around and making the ROCs and the CAGRs look better, because these assets lie in your books for a longer period of time, and if they don't execute and they don't provide the productions and the sales don't go up, then obviously the numbers go really bad. The next slide. Again, the annual balance sheet. I mean, this is something that's already been spoken about. This can be read through. There's nothing that I need to focus on the numbers. Okay, so these are things that I would want to share with all my listeners. The new interest that we have is we aspire to manufacture specialized parts for railways and tramway locomotives and rolling stocks. Having said that, we are already working with the prototype that we are trying to build on the Vande Bharat also. So there are new parts that are being made in the Vande Bharat. There are almost 11 types of trains there. So we are trying to build up on the coach fabrications also. and we are doing our prototypes. In the next 3 months, we should be in a position to start dispatching on the orders. Aiming to become the integrated wagon manufacturer, we've already been mentioning this for quite some time, that we have something in mind. We've already mentioned it. We've quoted and bid for a company called Amazon Transportation Industries Private Limited, which is a subsidiary for Antec Auto, and that is an integrated wagon manufacturer. Today, having said this, with the entire group effort that we have, plus the Cosmic CRF and having its all the subsidiaries in place, we are manufacturing literally everything. We have a casting unit, we have a component manufacturing unit. CRF in itself gives the entire solution to all the products. So that we are just one step away from becoming the most integrated. I would not say the most is a very arrogant word to use, but extremely highly integrated player in the entire wagon manufacturing space. And yes, this asset is something that we've put our sights on. We're trying hard. A lot of people have been questioning and the fact that this was mentioned way back, but NCLT sometimes acts a little like this. You have to act coy. You have to be at your best and have patience. This will come around to the best of my understanding. There's a heavy fabrication around it also. We are trying to build out on the fabrication part because we've taken the NS. NS is primarily infra player, though the fabrication and the rolling and the galvanizing, the production, the hammering, the forging, all of that is in the same place. It's similar pattern because it's engineering in nature. At the same time, it allows us to get into newer products like bridges, over bridges, crash barriers, tested barriers, sheet piles, a lot of type of sheet piles, not just one. And that gives us that actually allows us to provide the EPC players and larger players in the government bodies through proper 360-degree solution. Like you have to just come to us and we give you the solution to the entire product, an entire solution to your highways and to your your dams, your coffer dams, your bridge makings. That is something that we're trying to build around. We are very, very confident that we will be able to achieve this part of our company and this solution orientation by the end of this financial year in wholesome. The capacity, okay, so the acquisition of Cosmic Springs and Engineers Limited will add to the entire capacity of the company, going up to almost 110,000 metric tons. I will always say it is not just 110,000 metric tons, it's also what I can say it's 120,000 metric tons. The reason being, there's an engineering part to the Cosmic Springs and Engineers, the subsidiary that we are trying to get to. We are trying to buy out an asset, and once this asset is bought out, we've already shared our intent through the board meeting yesterday, and this intent will be fulfilled after all the compliances are done and the due diligence reports are available with us. We are hopeful by January we'll be in a position to acquire this asset and also in Cosmic Springs and Engineers and make this a completely wholly owned subsidiary of Cosmic CRF, which will add to the revenues at a larger level. Yeah, that's the same. So about us, I think we are the leading manufacturers of CRF. I think everybody has heard that. We tend to become an integrated railway manufacturer, wagon manufacturer. We have wide applications on our products that we manufacture in CRF as well as in NS, which is a wholly owned subsidiary. We can also manufacture now automotive parts, under chassis for 2-wheelers, 3-wheelers. That was a prototype that we are working with, and we will be able to achieve that also in times to come. We are also doing some protos with defense. Primarily as a promoter, I have always believed that India has stuck on 4 major legs, right? The 4 major pillars of Indian economy. Railways being one, infrastructure being the second, third being the defense, fourth being agriculture. As of now, I have put my sight on these 3 because see, there are always tailwinds to every industry that we have, every sector that we have. Railways shot up in 2022. We saw orders that were never heard of, never could have imagined such orders to come in. Like if people would have spoken about it, people used to laugh in my face saying this can never happen. At an average, India would produce 8,500 wagons in a year. Cut to, we are talking about 90,000, 1.5 to 2 years. It's embarrassingly astonishing, but massive, and it's being achieved, which is great. Similarly, with the infra, 52 kilometers were being made, the roadways and the bridges per day. Cut to today, thanks to Gadkari Saab and the entire set of bureaucracy that we have, plus the government, they have shot this up to almost 100 kilometers per day. So this is great. I must say that, just a minute, there is something on the screen. Is it on my screen? Is it something else? Are you sure? Yeah. No, it's on my screen. So so that's one point. That is exactly why we wanted to walk into this infrastructure space. Tomorrow, if there can be low days, on anyone's life, anyone's sector, anyone's industry. But when that comes, there can't be two low days on both or all three or four sectors. That doesn't happen. India is a growing economy, and I must say that the way it's growing, the whole world is looking at us. So people like us and promoters like us in our small ways can contribute. And when we talk about contributing, we don't talk about it from a CSR perspective, but contribution and make profits for our investors, for everybody, including the promoters also. So that's the way we want to think about life. We want to think about this company, and we want to secure its interests in the longer period of time. The total installed capacity it's the similar slide, but obviously we are trying to hammer this down everybody's throat that yes, we can manufacture 110,000 metric tons per annum. That's the capacity that we are setting up. Next year we will be at 120,000 metric tons per annum at the minimum, and that is something that we are working on. The capexes are in place this year. Having said that, with the math, it should be around 60,000 metric tons at the minimum. Our journey, we bought on Cosmic CRF in 2021 on the 9th of January. 19th of January, actually 9th of January, we had the discussion. 19th January, signed the BTA, business transfer agreement. 7th of September, we bought this company out completely. But before that, we were already working with the company, so we were actually making the sales. So the sales were for an entire year. But having said that, the entire asset got transferred to Cosmic CRF Limited on the 7th of September. 2022, we were in business and we were planning to list this company. In 2023, we were listed by 30th June, and rest is history. Everybody knows about what we've been doing. But the factor that I also want to mention, taking this cue, is that in 2023, when the company, in around February 2023, the company had just been bought out, and the balance sheets weren't really done. By that time, NS Engineering was already filing its Form G for people to put in their interest into buying the company out. So our company did not have that kind of measures, because we were a new company. This company was formed in 2021 December, and really there was no past records as such. So we were finally searching for eligibilities. We did not know whether we'll be listed or not, and we were talking about the options of being listed. That is exactly when we went to the bankers also, and the bankers asked us to get another company on board and file a consortium to get this company out, to buy this company if we can. Hopefully, by God's grace, we did. By the time this entire resolution went through, we were listed and we had a market cap. We were eligible. The bankers were willing to fund us. But however, the subsidiary, the other company that bought out 26% was a group owned by the promoters itself, and they also punched in another 5 to 7 odd crores that time, which was a big amount of money for Cosmic CRF. There's a constant research and development that's happening, and that shows. It's just from me saying it. I mean, we are talking about making products for the under chassis of locomotives and shells, and we are talking about manufacturing parts and CRFs for Vande Bharat. We're talking about manufacturing the best of the best products in terms of CRS, in terms of body parts, in terms of fabrication items for the wagon building and also for the new wagons. And along with that, we're also manufacturing almost 8 types of infra products and fabricating them and giving it to the best of the best clients like L&T and Shapurji Palonji, and also the irrigation departments of various states. This allows us to actually take onus on us and say that yes, kudos to us and our team. The R&D is at great shape, and we plan to keep doing the R&D on a constant basis, because I often believe, and I strongly believe this, that the companies that basically sit on its laurels, the promoter that feels that yes, he's achieved something, ends up giving it all away, right? So we will keep building on our strengths. We will keep doing the R&D, and we'll try and keep increasing the top lines, bottom lines, the interest portions for the investors, for the stakeholders, and also for all our vendors and our customers. The NS Engineering acquisition was expected to happen this year, and it's been happening. It's happened. We have done it. This year, the half-yearly balance sheet shows almost 12.5, 13 odd crores of turnover, which is just 1.5 months of business. This business will keep increasing month on month, because every line that opens up will only increase on the sales. We already are running up with almost 107 crores of orders in NS, and we plan to take another 50 odd crores in the next 3 months. Having said that, we should be in a position to do 20,000 metric tons of complete production and dispatches by the end of this year from NS, and almost 40,000 metric tons of production and dispatches from Cosmic CRF Limited's own factory in Singapore. Next. The product portfolio has already been discussed. So, I mean, there's a prototype, there's fabrications, there's similar items. This is again the NS part, but the subsidiary has a huge business and a huge, size of the market is very big. We are talking about capturing the entire 15% of the market of cold rolled form products, which is projected to increase to 2.25 million tons over the next 3 years. When we say that, we are often thinking as to what is the production, what is this projected amount that is going to grow. So railways at large is in a requirement of almost 8 lakh wagons as of now, out of which 3 lakh wagons will always be in refurbishments. Because why? Because of the fact that the the concept of cold rolled forming in sections came into railways in 2008 or 9. After that, they wanted to replace all the brake press items and the body part items and the body building items to CRF because they were facing with the difficulty of rehabilitating and refurbishing the old wagons every year. So there was a cost attached to it. Railways felt we can accumulate and allocate more money to making new manufacturing new wagons rather than just replenishing and refurbishing the old. So CRF came into picture. Now, having said this, in 2010, 11, 12, the CRFs that were being supplied to the Box NHL, the BCNHL wagons are now coming in for the repairs and maintenances. So at any point of time, you'll have 1.5, 2 lakh wagons in the refurbishment centers or incapacitated in any way or the other. And to cover that up, we had this order that came in, which came in a jiffy and is being executed at great levels by all the wagon manufacturers. Having said this, by 2030, they will need to have 8 lakh wagons on the tracks. If you do the math, we are talking about almost 75,000 wagons per annum. And to fulfill that, there's a wheel set factory that's coming in. There's a wagon manufacturer that's setting up a wheel set factory. There's imports that are being allowed at the wheel sets level for private wagons to be manufactured and sold. So at that level, we can see that the projected requirement is going to grow substantially, and Cosmic CRF is building its own capacity to match the requirements, along with it attain at least 15 to 16% of the market.
Aditya, shall we move to the Q&A now? Yeah,
we can, because this
the points will get covered over there.
Yeah, it's the markets and everything. So yeah, this is the presentation that we've already uploaded in the BSE and the exchange. It is available for everyone to see, and it is repetitive in nature. I personally believe that, but yes, it is information for somebody who's going through this for the first time, and for the first time is coming across this company. This is detailed for them to understand and to understand the grip of the company, what it does for a living, and what it's going to do in the future. We can go for the question.
Sure. So we'll disconnect the presentation and we'll move to the first question. The first question is from VN. VN, if you could announce your name completely.
Yeah, my name is Vivek. Thank you. Mr. Aditya, this stellar performance, obviously you're projecting this for the next 3 to 4 years. But yeah. Your turnover and what you said, 40,000 million tons, right? That represents how many wagons? And when you said 15 to 16% of a 75K per annum wagon requirement, you're saying 15% of 75 is around 10,000 wagons, right? So, so per wagon, what would be the cost? And at 10,000 wagons, what would be your turnover just from railways?
So from railways, if you're doing a 10,000 wagon business, roughly it is 2.5 tons per wagon, roughly. Because when you talk about a Box NHL, you're talking about 3.3 tons per wagon. When you talk about, say, a BOSM, which is being made right now, you're talking about almost 2.5. BCFC is again 2.6. When you go down to some wagons which are just the center seals, which is the under chassis frameworks, those wagons require 1.2, 1.3. So if you take an average out, it's almost 2.5 tons. So you're looking at 10,000 into 2.5, which is 25,000 metric tons from this part only. But along with that, you have the refurbishment business also, where you need the CRF. So the refurbishment of wagons that are coming in from and majority are Box NHL. So Box NHL needs 3.3 tons. Like for example, I'll framework this. Recently, when all the wagons came in last year for the refurbishments, the design was changed from an old door to a new door. So the door was being broken very easily when they were being utilized. So the doors have been changed, which has increased the utilization of the stringers and the side body parts. So it might go up to 3.5 tons also. That business in itself will be almost 2 lakh wagons. So 2 lakh wagons, if you talk about 15%, we're talking about 3,000 wagons, 4,000 wagons. At 30,000 wagons at totality. That is executed over a period of 2 years. And these are orders that railways directly. Along with that, you have your buy your own wagon scheme. So buy your own wagon scheme is away from the 75,000 wagons, which people use on their own gantries. They use their own sidings. Like for example, today CIL needs more than 3,000 rakes. There is a requirement that is constantly available from Ultratech. There's a requirement that's constantly available from Jindal Stainless Limited, Jindal JSW as well. So there are larger players who have their own sidings and they want to get their own wagons. So that in itself, that quantum is also 10% over. So we are talking about 35. We are talking about a totality of almost 45,000 metric tons in totality. If we achieve that, we'll be able to achieve almost 15 to 20% out of the market.
And is there a plan to take market share away from the biggies, or that's an area that you will only once you settle down, you will look at that?
From where?
From the biggies, the other large wagon manufacturers.
In CRF, I'm the only biggie.
You're the only biggie? So I'm sorry.
CRF, I'll tell you, Vivek, what has happened is over a period of time, when we came into this business, we were number 3 in terms of capacity. Penar Industries was the largest player. And today also, they've got a larger capacity in terms of cold rolled forming. But they manufacture more, PBs, like pre-engineered building products and XYZ. So they are more engineered, they are more, kept onto that level. They are not focusing on the wagon business. And that is because of one single reason. Majority of the serious wagon builders are in the east of India. And they have a huge cost problem where they have to provide this material from Hyderabad or Telangana to the east of India. So the freight cost is almost 5,500 to 6,000 metric tons. If you realize, when I had entered this market, we were talking about margins of almost 14, 15 rupees, 17 rupees per kilo. And today we are talking about margins for conversions of almost 13 rupees, 12 rupees per kilo. The reason, and we are one of the main people who have been frontliners in doing that, because we had realized that to get the market share, we need to put some people in their own corner. Otherwise, we'll not be able to share back to us. We were always interested in scaling up in terms of the quantity rather than just making lesser quantity and making more products and making more margins on that. Because the margins are not that, it doesn't go out from like 30 to 15. It doesn't go like that. It goes from 17 to 12. But that difference can be made up with almost doubling up your capacities. I mean, it'll cover up completely.
Okay, some very, very basic question. These 3 large players, Titagar, Jupiter, and Texrail, what do they do in relation to what you do?
They are basically assemblers. Every wagon manufacturer is a practical assembler. Now they have an in-house CRF that they've put up. They do probably make some products for themselves, but at the same time, in a CRF, say for example, you're talking about a box NHL wagon. Like I'm talking about a box NHL because everybody knows box NHL, so it's easy to refer. A box NHL wagon, you need more than almost 39 parts. So those 39 parts cannot be manufactured over one point of time, because different roller sets, different types of thickness of material, different widths of material. So there is a lot of permutation combination there. They always end up buying more products than they manufacture back home. And they are, once for them, CRF is a smaller game, because they are more interested in completely assembling an entire wagon and then selling it to the railway board or to the private players. For them, this is an ancillary. Our company is like an ancillary to them, right? The business that we do is almost what? It's almost like 10, 12%, 15% of the entire wagon. Yeah, and if you add the component business also, we will be still at 25, 30%. The steel is almost 50 odd percent. The rest of the 20, 30% is your castings. So this in itself is something that they don't really go into at larger scales. It's like Cosmic CRF goes into manufacturing the smaller handles of the door that we manufacture for the wagons. Now we will never go there. I mean, the door knob is available at 230 rupees in the market. It is sold widely across Howrah district in Calcutta. And if I go there, I probably will save 10 rupees, but my overhead costs will be much higher. For them, it's the same. For them, the overhead costs are much, much higher than where we stand today. So there's no competition as such.
Thank you. Thank you so much. Thank you.
Thank you. Thank you.
Thanks, Vivek. To address everybody's questions, we'll take only 2 questions initially per participant. We'll take the next question from Akshat Chavara. Akshat, you can go ahead.
Hello. So firstly, happy Diwali and congratulations. Congratulations for a fantastic result. So I had just had very quick questions. So how many certified CRF suppliers are there to the railways in the entire market?
How many suppliers, right?
Yeah, yeah.
So there are absolutely in the RDA, so there are 9 suppliers,
Okay.
out of which I think there are 4 suppliers that are not in the east of India. There are 2 suppliers out of that which are wagon manufacturers themselves. The third supplier is also a wagon manufacturer who's just got his credibility, like his accreditations from the RDSO. And the other 3 are much smaller in size than us. It's almost not even half. Like it's like 35-40% odd.
Understood. So also you had mentioned in the middle that you are looking at some defense applications, or if you could just give us some information about what exact component, or you're bound by confidentiality.
So so I'll tell you what, actually, I mean, this point of defense is basically we as a group have worked a long time with Garden Reach and a lot of these defense companies where we may manufacture smaller components. In the group at large, we manufacture more than 3,000 SKUs of 3,000 items on smaller and larger levels, forged, casted, inducted, as well as drop hammered, cold roll formings, fabrications, XYZ. Out of that, there are small items. I will not want to mention it. I'll tell you why. The reason why I don't want to mention it is before we get the orders and we get the prototypes done, this con call might be out in the open, and it might be, I mean, it is out in the open. People will hear it, and they will know exactly what are the products that we are hitting at. But yes, in the next 1.5 months, you will get to know as to what products we are going for. We're going for 3 specific products, and they are more fabricated in nature and more redone in nature, rather than just creating something. So often people, when they talk about defense, we in our heads also, when we were like 4-5 years back, there was no clarity. In defense, matlab tank hai, gun hai, all that. But then in reality, there are a lot of items that they require. Plus, with railways and defense, this company NS Engineering will be supplying material to them as well. Because they need cofferdam clarity, they need dredging to be done, they need their belly bridges to be made, bridges to be made. So they need bridge girders, they need sheet piles, they need crash barriers on their own end. They also need support angles, trench boxes, which are something that are being manufactured in NS.
Understood, sir. So looking forward to getting to know. And
Thank
so
you so much.
one last question, sir. You had mentioned also that you buy in the NS engineering facility, there are 6 lines and one is currently operational. By FY25, how many lines do you expect to be operational?
So
Awesome.
FY25 will be having 2.5 lines applicably operational. That will give us almost 25% to 30% of the operation capacity. But we are not certain that we will be able to attain that capacity. The reason being, I said 2.5. The half is basically half a product that's being made. The rest of the half of the material we'll be manufacturing by first quarter of 2025, second quarter of 2025, the entire financial year. But what is going to happen is when we buy these materials from the market, we don't get accreditation for this product. So we don't get the orders directly from the party or from the EPC contractors. We get it from brokers. And these brokers take material from us like any other steel material, and the margins are also lesser. So we don't want to push it. We want to manufacture that. We want to wait for our accreditations to come through, the BISs to happen, and also for the testing to happen. Once that happens, then we are on 3 lines. By December 2025, we will, by September 2025, we'll have all 6 lines in full flow.
Understood, sir. Thank you so much, sir, and wishing you all the best for the coming years.
Thank you. Thank you so much. Thanks.
We'll take the next question from Nikhil Chandak. Nikhil, you can go ahead.
Yeah, hi. So I just had one question, which is I understand, and you also mentioned that the larger group also has, some similar businesses. I wanted to understand, is there a plan eventually to kind of consolidate everything which is in the group into the listed entity, which is Cosmic CRF? And if yes, when are you looking to kind of do that consolidation?
Nikhil, it's a good question, and I'm telling you what, when I made this company, like when I formed this company up, my idea was, after listing, my idea was to actually start consolidating everything. So when we talk about, if you look at my guidances that I keep giving, that we'll double up every year, it's practically not possible if you don't consolidate. It's practically not possible because ground up, you can't keep building an NCLT is not my father's that I'll keep going there and buying new companies, right? So we'll have to keep consolidating. This Cosmic Springs and Engineers is actually buying an asset that is already owned by us in one of our companies, and we are buying that asset at half the price. Half the price being because we've already started the manufacturing. So what happens is, when we take this company out through a BTA process, the RDSO and all the other procedures and all the other licensing doesn't take that much time. You're already in business. You're actually already supplying to the vendor, to your larger customers, and that helps you get the licenses faster. Plus, you don't have any downtime. So when you set up a mill and then you are wasting time on the slow rolls, the cold rolls, and then the cold rolling, and then the production, and then the testing, that in itself takes 6 months. So what we are doing is we're not letting Cosmic CRF spoil its books. What we're trying to do is we are trying to do this on the outside. There are other businesses that we keep doing, but see, there are two businesses that I have, two large size businesses that I have, which is also supplying to the railways, like casted items and fabricated items, smaller components. They are with my brother. Now he'll have to say yes to it. So let us make this company that large that he feels that yes, apne de do ye company.
Perfect. Great. Thank you. Thank you.
Thank you.
We'll take the next question from Ashish Periwal.
Yes, please.
Ashish, you can go
Hey,
ahead.
hi Aditya.
Hi,
First
Ashish.
of all, happy Diwali to you and team,
Happy
and
Diwali.
congratulations on decent set of number. I have two questions. First is on
Yes.
that I read a press release that we have some tie-up, or there is some discussion with the Russian railway giant for some
Yes.
tech tie-up. So can you
Yes.
give us some update? I'm not sure if you have given it in the call because I joined the call in between. So that's the first question. That what is the update on it, and if it goes through, then what will be the impact on our financials? And the second question is that shall I ask
So,
that?
Ashish, let me answer this, and then we can go on to the next question.
Sure.
We'll do that, right? So, Ashish, this has happened. We have already mentioned it in one of our notices to the exchange as well. We were in Moscow with my entire team a couple of times, and we had a detailed discussion with one of the railway giants. We've signed an NDA so that we can't give their name until we sign a contract with them. We have signed the minute. There's a minutes of the meeting. There's a contract as well that has been signed in the preliminary of things. But in the eventuality of things, we are waiting for a takeover to happen that will add value to this association that we are doing with the railway giants in Russia. What are we doing with the railway giants in Russia? See, they are, as far as I believe, with the kind of things that I've seen, with the little knowledge that I have about railways, I believe they are much ahead of us in terms of its tech. So we are trying to do a tech transfer with them. Why a tech transfer? So the tech transfer will happen where they will provide us their know-how, their technological skill, and the machinery and the entire design. We will be able to manufacture those products in India for them and sell it to the countries where they probably have a problem in selling. Now, what adds value to this is, as a producer, as a manufacturer, I don't only want to be dependent on the Indian market for nothing. So, for example, CRF, I was only manufacturing products for the railways. Now I've stepped up in within the next 6 months. So if you see, I got this company out in 2022. By 2023, I was already pitching without enough eligibility. I was pitching for taking over NS Engineering, because that would have given me a foray into the infrastructure sector. Similarly, this has allowed, the moment we started thinking about making ourselves an integrated wagon manufacturer, which is obviously the end goal of the entire consortium, because we do everything for the wagon and the coaches and the railways. A wagon manufacturing facility will give complete integrated processing, backward integration, forward integration will be completed, and we'll be able to take out the best value out of it. But having said this, 70,000 wagons from my mathematics is required by India, by the Indian Railway after the DFCC by 2000 till 2030, within 2030 actually. Post that, there might be some situation where there will be some sort of stagnancy. Maybe there'll be 40,000, 50,000 wagons that are required every year. But our companies will want to keep increasing in capacity. So we will have to open markets. It is better to open the market right now than to go that day when we probably do not have option here and we go running there, and there are a lot of us who are running to Russia and other places. And about the second part of your question was, I think that you asked me, what is it going to add on the revenue part? So see, if you go about a wagon manufacturing business, wagon manufacturing at large is like almost a 32, 33 lakh business. Whereas when you are trying to sell this product, the similar products, costings can be 15% up and down, like not down, up only, but in terms of the requirement that they have. But the sale price is much higher. It's almost like 44, 45 lakhs, 46 lakhs. Sometimes they give you 52 lakhs for specialized wagons. That in itself will add a lot of value. But having said this, we do not want to do something like this. Like, we don't want to show those numbers because they're large numbers compared to the business that we are doing right now. But once we are in that position, we can get into that position within the next financial year. If we get into that position, because the takeover needs to go through, and then we will accumulate ourselves and our resources, and we'll go to Moscow and we'll get this done. because this is just on the brink of it's happening. I mean, they are waiting for us to call them and go them and just sign the documents. We're just waiting for this trigger to happen in India. Once this happens, then we can do that. There's a question that comes to my mind when I answer this is, what if we are unsuccessful in one of our takeovers? Then what next? Does Russia go down? No, it doesn't. We are already working with a land parcel for the last 3 months. That's also in West Bengal only. And it's a railway siding. And it will take 1 extra year for me. If I don't get this asset, we'll probably take 2 years rather than 1 year. But we will set it up. And to keep the Russian partner in bay and in complete consensus with us, we will start business with them through our casting units. So we'll start selling fabrication and casting items to Russia, exporting it to them.
Okay, one follow-up question. So
Yeah.
are we looking all the asset acquisition in West Bengal only, or we are planning to look pan India? Because there might be some geopolitical risk which I see. I mean,
Yes. I'll tell you what, Ashish, we are a 52-year-old business house. I'm third generation, but I'm heading everything now. So with all my humility, I can say that we are primarily based in West Bengal. Like, we have a lot of our business interests, a lot of our factories in West Bengal. But yes, your concern is also something that has been addressed at our board levels, where the assets that we are talking about are in the west of India. It's not in the east of India. The next asset that we are setting up is probably in Jharkhand, not here. We are trying to deleverage ourselves from only being called West Bengal, a territorial company in the east. We are trying to go pan India. If the acquisition, and I personally feel, I mean, I'm a very positive thought processed guy, where I feel that yes, we will be able to get through this deal. It might take some time here and there, but by time also another month or 2-3 months. Once we get through this deal, we will be having a larger asset there than all our assets here. And plus, after Jharkhand happening in the next financial year, next financial year, we will have 3 or 4 states that we've covered in Cosmic CRF.
Thanks. And one last question. So I see that the guidance is of 2x revenue each year. So maybe in the next 5 years, we will be 8 to 10,000 CR of top line company. So is the understanding correct? I hope it is each year, because in the PPT it is doubling 5 years. Something was.
Yes, that's the vision and the mission, and we are working very hard on it, Ashish. I mean, see, we have our own, we always have our own competence level, and we have our own, your threats and opportunities and all of that spot. But having said this, we are working around the clock. We are absolutely committed to achieving what I've said. The entire team is, and we are working around the clock to achieve that. The asset that we talk about today for a takeover is going to give me the revenues and the profits almost 1.5 years later. Not every asset is going to be NS, because NS was just very allied and very close to our asset, also to our Cosmic Singur, and we had knew a lot about this company, so we could really turn it around on its head very quickly. But even then, I mean, it takes time. So what we have thought about this is, Ashish, that I've done the math also myself, where I stated this, and I wanted to be very clarified about it in my own head, and I said that if I need to keep increasing it, I need to keep doing these takeovers, need to keep building on the production levels, need to keep building on the asset levels. And this entire process, and we cannot go out of our competence level or out of our business sectors. So we are doing this on a day-to-day basis. There will be information which will be given to every investor through the CB exchange, to the exchange and the BSE intimations that we keep giving. In the next 6 months, there will be a couple of units that we will be talking about, and that will give you the idea as to, yes, that we can probably do this. We can probably do this.
Cool. All the best, Aditya.
Thank you, Ashish. Thank you.
Thank you. We'll take the next question from Hanu Rao. Hanu, please go ahead.
Yes, thank you.
Yes.
My question, it's very good set of numbers from Cosmic CRF.
Thank you so much.
It's very good. So, the outside talk is like the promoter is like, aggressive. But I can see the aggressiveness with respect to what you speak, and your execution skills are very good.
Thank you so much. Thank you so much.
In this perspective, I have 2 questions. The
Yes,
first
please.
question is, you're giving guidance for next 3 years or 4 years.
Right.
But if you see the business, it's like a commodity, it's a steel.
Right.
Maybe if there is a fluctuations in the steel price,
Right.
how you will compensate the guidance going forward for next 3 years or 4 years? That is my first question. And
Right.
second question is like,
Let me take the
you
first
are,
question, the second question.
yeah, yes, please,
But
please.
so that makes it easier for me to say. Otherwise, we'll again reiterate. So the idea is that, Hanuji, this question was asked to me almost 4 years back when somebody asked me about railways. So we usually deal with our businesses through a PVC clause. That's a price variation clause. I am always of the opinion, and I tell my customers also, that I'm not into the steel trading business. I don't care about the steel pricing at all. Why? Because if I would buy it and I would arbitrage it and I would sell it for making the profits, that was a separate issue altogether. I am an engineering solution provider, an engineering company, a component manufacturer. My business is primarily engineering. So I am providing that skill set, that product. I'm making that product for my vendors or for my customers at a particular cost. The cost is something that I usually break up with my clients. Like for example, with Titagarh, I sat with the board and I have broken this cost up a million times, where they kind of question, why are you taking so much profit from us? And we break it up and we're like, this is what we want and this is what we work with. If the price goes down tomorrow for steel, then my price all over goes down, but my margin doesn't go down. The margin isn't a wholesome number. Like it's like maybe 15 rupees, maybe 10 rupees, maybe 7 rupees, depends on various items that we manufacture or in different sectors. Along with that, if the price goes up for steel pricing, so our price also goes up. The selling price also goes up. The steel pricing will remain the same. I mean, the steel pricing being constant, the pricing will remain constant. My margins will remain there. Having said this, you have rightly pointed out, railways is an easier market to deal with because we talk about price variation clauses, because the wagon belter also has a price variation clause and also all its tenders. But along with that, when we talk about, say, an infra market does not really have a price variation clause because we have the EPC business. That is why, Hanuji, we have made life very simple for ourselves. We will only the kind of debtor stretch that we see in our books is because of the railway business that we are doing and because the prototype. Talk about the NS. When NS comes in full flow, we'll hardly have any debtors. Like hardly, because the reason is we will want to do cash business, make it today, sell it today, or sell it tomorrow at the price that we bought. We will have forward books with the sellers of the raw material. So, for example, there's a concept in the raw material purchase. If we want to purchase, say, 100,000 metric tons or 200,000 metric tons, is a substantial quantity because these are very specific items that we manufacture. It's not like the run-of-the-mill IS 2062 grade A available everywhere, 1250 width. It's not like that. It's like specifics, 1150 width, E450, BR copper bearing, BR CUR, BR copper bearing, FE570 grades. So these grades are specifically made for us because the steel mill makes it, then they don't have a lot of buyers for this. So what we usually do is we give them, say, an open LC, and the LC is a rotating LC, and we book the entire order on the entire year. It is not to do with the pricing at large. They might make a profit on it, they might make a loss on it, but that's not my concern. For achieving that kind of hold on the raw material sellers, we need to get into that quantity level. So till now, we are on the railway side. We are protected by the PVC and the understanding between the railway giants and ancillaries like us. But eventually, we will get into 100,000, 150,000. Once we get there in the next 1 year, we will have that set up with the steel mills. So that will protect us from the price variation and from the arbitrage of the raw material pricing.
Okay, sir. Thank you. And my second question is related to your next takeover. It's like MZN, which you are currently in the NCLT process.
Two months back,
Yes.
I had already planned my after party, after the takeover. The takeover
Yes.
aaj hoga, kal hogi after party. Yeah, I was planned mentally. Cut to that, imagine at 35, being impatient, you can see me on screen and you can realize how impatient I am with these kind of things which I've already put a milestone on. So see, I've actually done a couple of things. Sorry, please.
My question is not completed.
Sorry.
Yeah, the reason for asking this question, to acquire this company, it's a kind of turnaround for Cosmic. Maybe other people don't know or don't know. I'm not sure why, because currently the Titagarh and the other Jupiter, they are around 15K market cap companies.
Right.
And right now, Cosmic CRF is like it's 1,000 crore, 1,200 crore market cap company.
Right.
Once this takeover is success, if it is not success, you have plan B. But I want to know the timeline. If this is success, how much time it will take to start production? And if this is not, if it is failed, your plan B execution, how much time it will take? So I want to give plan A and plan B time
Done.
zone. Yeah,
Done.
thank you.
So, yeah. So Hanuji, I'll tell you what. We have 3 plans. One is to take over the unit that we are already fighting for, right? This is NCLT. We have put in all our resources on the page and we are trying hard to get this. So I'm very, very buoyant on the fact that we will be able to get this. The timeline should be by the end of this financial year, we should be in a position to acquire this. Having said this, if we acquire it, it will take approximately 9 months for us to refurbish it and get the licensing in place, because it was a company that used to manufacture. It is integrated unit. It's a state of art, no doubt about it. But it hasn't manufactured over the last 2.5 years. So it will take time to refurbish, and the licensing will have to be again reinstated, which doesn't take much time, it takes 2-3 months, but it will be reinstated. So I have kept 9 months for that. But having said that, our productions will start in 3 months' time. Why? Because every wagon building unit has a fabrication and a deployment of production of smaller parts also, along with the entire assembly. So assembly is one part of it, but the manufacturing and fabrication part is available. That can start from within 3 months. So we will not go into a position where we buy an asset which is extremely hefty on the books, but we go completely null on the entire year in terms of revenue. That is not going to happen. Point 2, if we do not get this, then what next? So I spoke right now to a gentleman right now about the fact that we've already seen a land parcel, and we already seen as in we've started investing in the land parcel. We are very deep into it. It's a railway siding. It's in West Bengal. West Bengal gives us a very lot of clarity on the fact that my other companies can also provide me all the components. I don't have to wait for anyone else to provide me these materials. The main idea, like, I mean, when I'm talking about this, I just want to throw some light on the on what happens in wagon manufacturing, why people don't perform like the way Titagarh performs or like a Jupiter performs. The reason is Titagarh and Jupiter have a very decent format of acquiring the raw material and all the items to assemble it product in a particular wagon. Even if you don't have one nail on the wagon, you don't get a DM, like a dispatch memo. So it remains like that, and it's your dead working capital that's lying there. For us, it's very important for us to come from the back. So the backward integration happened first over the years, where we have all items, all components. So today, if we get into the assembly part, it's my companies only who will be able to provide me in sets. So our production jump will be much higher. Why did I want to mention this point is because the moment to say after 9 months, you go into the complete production part. So we will not go like, say, for 30% in the first year, 70% in the next year, like the way we make CMA data. It'll go straight to almost 80% on the asset that we've spoken about, 80% capacity utilization right from the month 10th, because there's no reason for us to stop. The second point that I was mentioning, that the option 2 will take one more extra year than that. So say, for example, option 1, March, we get the asset. 9 months from there, we are talking about December. December onwards, it starts. December to March, you will get some wagon outturn. Before that, you will start having your fabrication outturn. So you'll have decent amount of revenues. Maybe 25-30% of the revenues will fall in. Next year, you'll have full flow. If we have option 2, you just add one more year to it. So it's December 25 for option 1 for start off, December 26 for option 2. Now, the third option is there's a lot of consolidation that will happen. There are a lot of wagon builders that are still lying there, which are not performing like the top 2, top 3. We talk about the top 2, top 3 all the time when we talk about the wagon industry. But the requirement is in such a need of, it's a need of the hour for the railway board, that they will have to reconstruct or probably have to tell these guys to sell out. And these guys will find value. I mean, when they were sitting with wagon manufacturing units over the last 100 years, I know a couple of companies, not naming them, they are 110-year-old companies. They're sitting on the land parcels, and now they're calculating how much the land has costed me, so how much the land will fetch me if I stop this business. So those are the guys who will be selling you these products at the pricing that you will need, maybe some premium, but you will get it. So there will be options available over a period of time. We want to fight for this because I have always believed, Hanuji, that if you look at 2 options at one go, you always get very complacent about it. So let's look at only this one option. Let's put in our all, fight for this. I am very, very buoyant on the fact and very confident that we will be able to achieve this. If we do, then rest is history. If we don't, then we go to option 2 and we are talking about one more year.
Thank you. All the best, sir.
Thank you. Thank you.
For your team as well.
Thank you. Thank you.
Thank you. Before we move to the next participant, we'll take a few questions from the chat window. We'll first take it from Shashi Anand. Shashi, you can go ahead, please.
Hi Aditya, happy Diwali.
Happy Diwali, Shashi.
Team. Loved your energy during the call and also your understanding roundup of your business. I have two broad questions. Lot about Amazon has been talked about. Uh,
Yes.
my understanding of this call is a lot of things about wagon manufacturing hinge on your Amazon ka NCLT process, right? And it has been,
Right.
and I don't want to kind of over question is, but when do you decide to go with, let's say, if it may take 6 more months. I don't know what kind of clarity you have, but it may take more time. NCLT
Right.
process, right? So when do you decide, I want to put a stop to this and I want to move to option 2 or a 3? A quick revert there, and then I'll move to my second question.
So you are asking me if I can reconstruct your question just to
Yeah.
get some clarity, that you are asking me that this might take 6 months. I'm with you on that. NCLT, like I said, is not my father's. I mean, we can put in our best, but that's the best that we can do. It can take some time, and we have seen Amazon in the past has gone for 4 years. I mean, the COC meetings that we do is like 50th COC meeting. Like the guy was 70 when he joined as an RP. He's 80 today probably. Yeah, it's strange. But like the asset that I'm talking about, I've already started working on it, right? So that asset, when I talk about 2 years, is only because usually when you set up a wagon manufacturing unit from ground up in West Bengal per se, we talk about 3 years because the land allocation, the land buying.
No, sorry. I was asking, when do you decide, I don't want to go with NCLT process anymore and I want to move to my option 2? I understand your timelines after that, once you decide. But when do you decide?
We won't decide.
Or you just kind of wait for NCLT
No.
to say
it's very
no?
simple. You had probably would have answered your question in the second paragraph. So I will not stop. I mean, we are not going to stop. We are relentless in our approach. एक बार पकड़े हैं तो छोड़ेंगे नहीं. तो अपने रखेंगे. अब question आपका ये होगा that what is going to happen if you buy that also and you've already made this unit, right?
Yeah.
Sir, ऐसा है, there is 75,000 wagons to the best of my knowledge. Now let's understand this and let's say my knowledge is not at its best. We talk about 75% of that. So we are still talking about 50,000 wagons. With my Russian counterpart belief and with the mathematics that we've done, we will get some orders of almost 4,500, 5,000 wagons from there. If we want to get, I mean, I don't have that kind of capacity. So when we talk about say 50% of that capacity, it's 2,500 wagons. When we talk about 50,000 wagons, we have practically 9 serious players, wagon builders, out of which 4 have a capacity of more than 600 wagons. 4. Out of which only 2 manufacture above 700, 600, 650 at a continuous level because they have 2 plants. Mind you, they don't have 1 plant. Titagarh has 2 plants, Jupiter has 2 plants. The others, like HEI also has 2 plants, but they don't perform like that. They have overperformed from what people were expecting, but they have made 400, 450 wagons. But when we do the maths, we are talking about say 700 wagons at an average. And we're talking about say 11 wagon builders, 7,700 wagons into 12. We're talking about 92,000 wagons. Most of these wagons are also going to go into refurbishment into private wagons also. There are some wagon builders that make completely that. Now, when we talk about 700 wagons, it's uncalled for. When you do the math, if you do a weighted average of all the wagon builders, I'm telling you, out of the 11, top 2 are making 700. So let's do the math together. Okay, so it's like 700, 800 for Titagarh. They're doing 1,000, but they're averaging out at 800. Then talk about say an HEI which is 400, 450, 500. Then we talk about the others which do not cross 150, right? Starting from sale rights to Besco to all of these guys don't make more than 150. And majority of them there are some wagon builders which make 35 wagons. So we are talking about 100 wagon into say 100 into 7 plus 400 plus 700 plus 800, 2,600 into 12. We are 31,200. Market still open. So even if you discount what I'm trying to say by 25%, 30%, I'm still having a market share. Like I can go out and get 10,000 wagons for myself. The best part is, you know what? The best part is when people like me come in with say 4,000, 5,000 wagon capacity on the first go. So we become the guys that everybody takes care of because we are the new entrant. We might break the pricing and we don't need that kind of quantity with the need. So we are in a safe spot on that nature.
The second question is, I see Aditya working for at least has 8 to 9 positions, at least what you saw on LinkedIn, right?
Yeah.
You are also doing a lot of, let's say, going through NCLT process. You are enabling a lot of things, right? And you are trying your hands at multiple things. I tried getting, let's say, next line of leadership of yours on your website or let's say even your declaration. I'm not able to get to. So can you throw some light on your org structure, your next line, You are doing NS, you are doing Cosmic, you have 5-6 more positions, you are doing something in EV. So
Right.
what's your next line of leadership? Since you are,
So-
so you'll need team, right? So there I'm
So I
not,
tell you,
yeah.
I tell you. So I come from a family which has worked with, like, my dad and all were brothers, right? So they're three brothers. They are brothers. Having three brothers, they had partners. So when I came into joining, like, I finished my education in the UK. I came back in 2012. I joined my company and I used to feel bheed zyada hai, kaam kam. See, the idea is I always have believed since then, and I because I was studying abroad and I kind of believed that professional management is the way to go ahead. After a particular point, if you think about it, 3,000, 5,000, and 8,000 crores of orders coming in, going out from 4 units, 10, 7 units, 8 units, it's practically impossible for one man or for any leader to take care of on his own. Now, what does a leader do basically? He's a CMO, he's a chief money officer. So that and also your chief compliance officer. Also, the vision guy, the mission guy, the guy who's basically looking at the numbers and telling everybody what to do at the right time. So if you see, if I divide my 14-hour, 15-hour work schedule, and I mean it 14 hours, 15 hours. I'm not fapping in the way that, okay, people say 16 hours, Elon Musk works for 20. Somebody might say 25. We are working for 14, 15 hours at a go. I am telling you, I find it easy to handle because I have certain ways of handling it. But having answered your question, if I want to answer your question, by the next 1.5, 2 years, we will have more robust boards, people like board of directors. We will have people who are already working with me in consultation formats. Like, I have a larger team. Like, if I have 100 people on my muster roll for Cosmic CRF in terms of my employees, not my wage earners, I have literally 7 or 8 consultant bodies which are working with me hand in glove, and they're like partners in crime. They are all at it. So I have actually delegated my work very nicely. It's happened. I mean, at times I used to feel, how have I learned this and how have I evoluted over a time period of time. But I think time teaches you. You kind of start feeling stretched for some time. In a month, you wriggle out of that stretchy moments and you start finding the right person for the right job. Today, we have grown from 22 people work strength to 110 plus 7 consultants in a time span of, I think, 9 months. And that is not increased by shot up my costs massively. That is why the consultancy. That is why they are not in my master roles. Because we can discontinue if you want to. We can continue and we can go up to the next level. This has allowed me to open a lot of arenas. Why do I have opened a lot of arenas? I want to answer that also, though you have not asked me this question. So I personally am a guy. See, it's all, at the end of the day, it's a man behind everything. It's a concept. My concept is very clear that every guy in his life usually has 5 to 7 odd years, which is his prime. I personally feel my prime's just started. So that is why the guidance for 5 years. That is why all the talk about 7 years. What happens after 7 years? Yes, we keep growing, because by that time, you're not only having to look at Aditya Vikram Birla's face, you will have a complete set of people who can represent the company again and again. And it need not be one person that we're talking about.
Makes sense, man. Thanks a lot for taking time out and giving me a detailed. Thanks a lot. Looking forward.
Thank you. Thank you so much.
We'll take the next question from Yash Singh. Yash, you can go ahead, please.
Hey Aditya, how are you?
Hi, I'm fine. Yash. How are you doing?
I'm good. First of all, congratulations on these amazing numbers and happy Diwali to you and your team.
Happy Diwali to you too as well.
So Aditya sir, I just have basically two questions, that too on the financial part. So we saw that our standalone revenue was close to 158, 160 crores, and our consolidated turnover was close to 169, 170 crores. So the difference is close to 10.5 and 11 crores. But if we match the trade receivables from the balance sheet, the difference is coming close to 18 crores. But the revenue itself in the consolidated and the standalone is close to 10.5 crores. So there is 8 crores difference which is coming in trade receivables.
In the trade receivables. So
Yeah.
see, there are various reasons as to why that happens. It's only because we have loaded up on a lot of debtor positions, right? There are debtors that don't come into your sales immediately, where you're given material in advance for inspections, right? So that is one of the trade receivables that is there available. Why does it happen with something like an NS? I'll tell you why. NS needs almost 3 or 4 months more to get its licensing in place. Without the licensing, we are having to give the material to next party, or via just advancing the material. They get the material inspected for us, and they are providing us the sales. So we are booking the sales after that. We are only showing the advanced movement of the material. So that is why the trade receivables are a little underjudged. But I'll tell you what, Yash, in the next 1 quarter, when the balance sheets will come out, you will see my trade, the debtor position that's stretched, the trade receivables will all actually settle up. The reason is everybody, wherever we had actually pushed our material to all the wagon builders, to the NS guys also, to the APC guys also, we had done it only because we wanted to capture a certain point of market where we knew that the prototype, the trench boxes XYZ, the other peers of our industry will be able to manufacture that in the times to come. And maybe in 2 months, 3 months, 4 months, they will develop. It's not rocket science. They will develop. But if we punch this material in the go, then we will be able to attain this order. The guy who's had this material now will not have to think about placing a new order for some time to come. By that time, the averaging out will happen and new products will come. So that is one of the main reasons why the dislodging was happening and why the debtor position has been stretched.
Okay, so basically the billing has not been done yet, but the raw materials has been passed to the supply to the
On
vendors.
advancing,
Okay,
yes,
on
yes.
advancing, yes. And similarly, could you also guide the margin profile on NS Engineering, because it was close to 6 crores of profit that was added on the consolidated level from NS Engineering.
So basically, see, I'll tell you what, the 6 crores that has come as an extraordinary profit. The extraordinary profit that's happened is because when you take a company out from, say, NCLT, you know this better than me.
Yeah.
So usually what happens is you have a negative reserve surplus, right? Along with that, you have the bank debts that are being written off. Along with that, you have the creditor positions that are being written off. Once that happens, the entire reserve and surplus comes into positive because you paid off for it. So when that happens, there's a MAT that you achieve, and there's a there's a reserves and surplus position that you achieve. We basically took that reserves and surplus. So the reserves and surplus stands at I think the benefit has come up to being more than 10 to 15 odd crores. But we had clarity on the 6, I think 5.91 if I'm not wrong. So we took that as an extraordinary profit on the books. But if you see the actual profit on the in terms of the operations, that is only 20 odd lakhs has come through.
Okay, understood. Yeah, that's all, Aditya. Thank you, and all the best for your future.
Thank you, thank you, thank you.
We'll take the next question from the chat window. We'll request Mahesh Atal to ask his question. Mahesh, please go ahead.
Hi, am I audible?
Yes.
Yes, Mahesh.
Hi, Aditya ji, congratulations on a great performance and happy Diwali.
Happy Diwali to you.
The Diwali is earlier for you this year. And
No,
I
Dhanteras
hope
happened at the right time.
your excitement shows it all. And we look forward to many Diwalis like this.
Yeah. No, I said Diwali happened at the right time. I think Dhanteras happened at the right time as well this year.
Yeah, obviously for you it is there, for us it is there, and we'll look forward to more Diwalis like this. Just wanted to ask something which actually I missed out. Maybe you must have answered it to earlier participants. I was late to join. So basically, I wanted to know this. Let's say there's a wagon which is 30 lakhs or 40 lakhs, which is the value of a wagon. Just wanted to know what percentage would be CRF out of it. Can you give me in value terms? And
CRF.
the second part of question would be, when NS engineering comes on to play, and then the galvanizing unit comes with it.
Yeah.
So galvanizing adds some basis points to my margin, right? Obviously, because I will be like backward integrating my product.
Yes.
So
Yes.
how do you see that? I mean, the margin expansion is going to happen because the balance capacity from NS engineering is going to come in the later half or maybe the next year. How do you see it?
So I will answer this. So I'll answer the NS first because it was later, and you're going to ask me the question again back, right? So in NS, one of the main reasons why I looked at this asset, not only because it was a cold roll forming asset, but also because it was a asset that was dealing with galvanizing baths. When you talk about a galvanizing bath, there are a lot of types of galvanizing bath, but this was like a 18 meter into 6 bay galvanizing bath, a massive structure. When I saw that, I was in love with it because today setting up a galvanizing bath of that structure and getting the pollution clearances in West Bengal is going to be like next to impossible. It's very difficult. So that was coming hail and hearty to me, point one. Now with the margins that is happening, so the products that NS Engineering is getting into is trench boxes, sheet piles, crash barriers. So not just crash barriers like the waves, but the tested barriers, which is more precise in format, and it can be exported in a larger scale. Along with that, high masts, poles, T&Ds, the angles and channels. Along with that, they all are galvanized. Now, in my galvanizing bath, I will have to probably do roughly 5,500 metric tons of galvanizing every month. If I do 3,500, I add up on the margin almost 1.5 to 2 rupees in the margin of the finished product. If I'm doing almost 4,500, I'm adding 2.5 to 3,000 rupees, 4,000 rupees. If I'm doing 6,000 tons of galvanizing in a month, I'm adding almost 5 odd rupees, 5 to 6 rupees. Now I would want to average that out, and I will say, let's say we do 4,000 tons of galvanizing, because there are some items which might not need galvanizing. If I do 4,000 tons of galvanizing, I am doing 4 rupees, roughly 3.5 rupees as an average on addition to my margin. Now, when I talk about a sale price, majority material that we sell on these items are probably mild steel in material or cotton steel in material. So cotton steel, mild steel material, we are talking about a selling price of almost 85,000 rupees. When you talk about 85,000 rupees, we are talking about 3.5 to 4,000. 4,000 divided by 85 on the sale price, we're looking at 4%, 4.5 to 5% on margin increment. So if without the galvanizing, like everybody said, like somebody, I will reiterate, I met somebody in Bombay a couple of months back, and that gentleman told me, that CRF is a great business that you have. I think this NS is not a great takeover that you've done, because it might be a lousy piece in your entire architecture. And I was like, I said, I beg to differ, but I don't want to have this conversation right now. We'll have this conversation once I'm back in December, and we'll have this conversation. The reason why they don't understand this is because when they compare this business to, say, already listed entities that are doing this kind of business, I'm not naming them, but they're already doing this business. So a couple of them which are at 4,000, 5,000 crore market cap, they're doing 2.5% of PATs. There are reasons for that. The EBITDA levels are decent. It's like 5.5, it's like 7.5 to 8%. But they are heavily dead books. So there's a huge interest that they pay out. These companies are old in nature. But having said this, if we leave 4%, I'm saying even if you add 3%, you're still talking about 11% of EBITDAs. And 11% of EBITDAs at an average will give you almost 5.5, 6% of PATs.
Great. So my first question, what would be the value of your product in a particular wagon cost of around 40 lakhs, let's say? Let's say a wagon is costing me around 40 lakhs.
So I'll give you the answer.
What would be your component in that wagon?
So I'll break the answer into 2 parts. If you talk about only the plain CRF product that we get an order for and we give it, so that's roughly 4.5 lakhs on 33 lakhs. That is 13.6% to be precise. But when we talk CRF, which is side body, end body, bolsters, angles, stringers, chassis frames, XYZ, all the fabrication, quarter chains, all of that fabrication put together, we are looking at roughly 21%.
Yeah, thank you, Aditya. And one small suggestion from my side would be like,
Yes.
I would really request you to take one thing at a time, because I think you're having too much on table right now. And I think one thing at a time would be really good for this company. And there's a lot to go. I think railways is such a big industry, and we are at the right place at the right time.
I will. Absolutely, your point is noted and taken. Yeah, I mean, I love
all the best.
answer that you've shown. But I will finish it. I'll finish it with
Yeah,
the
please,
of
please.
my own. See, if I take one thing at a time, I will probably reach where everybody is, thinking about reaching in terms of Cosmic CRF, in terms of its top lines and bottom lines. Probably in the next 8 years, 10 years, we want to range that up in the next 2.5 to 3 years, for which I will have to keep investing and keep putting my hands into the muck and getting into the places where nobody is tread to. We are looking at God and hoping that we'll be blessed.
Great. I hope God gives you that energy.
Thank you.
Keep up the good work. All the best.
Thank you so much.
Thank you. We'll move to the next participant, Mr. Amit Kumar. You can go ahead, please.
Thank you for the opportunity, sir. Sir, I can see the guidance for FY27, F26 is 500 crores and 100% increase every year. That comes out to 8,000 crores in FY30. And as of now, we have order book of 520 crores. So how are we going to increase the order book? Because we have very big ambitious goals of reaching 8,000 crores of top line in FY30. Could you please provide?
I mean, 8,000 is a new number for me, because I remember giving an interview and giving somebody 5,000. 5,000 was something that we had mentioned, but let's say we go into the point. So today, if you want, we can get 1,000 crore order. We can fill our order books completely. but you have to keep increasing your production strength to actually match that orders. Because like I said right in the beginning of my meeting, that usually these orders that come from the railways and from the EPC contractors and from the infra players, they come with a timeline. The schedule for deliveries is fixed. If you do not give the deliveries, there's a late payment attached to it. You get penalized heavily. 3.5%, 4% is the penalization. In railways, you get blacklisted also. So we have to walk on a line which makes our books look very, very buoyant with huge order books. But today, think about it. So next year, when we probably talk about, say, doubling up 500 to something X, right? So we will always try and cover. So my mathematics is very simple in my head. Whatever I'm trying to achieve on the entire year is the order book that I want with me. So the day I reach 8,000 crores as my top line, I will talk about an 8,000 crore order book. Not more than that. Because we divide our order book over a period of quarters. And if we do not do that, we will take more orders. People will clap on and put a pat on our back. But at the end of the day, will give us terrible results. Because we will not be able to contain that. We will not be able to control that.
Okay, okay. Thank you. And I'm new to this company. If you could provide what is the bifurcation of order book of 520 crores? So what is the railway and other like private players?
So 520 crores, the railway is basically almost 408 crores, and the rest is infra.
Okay, thank you, sir.
Thank you. Thank you.
Thank you. We'll take the next participant from the chat window, Mr. Amitav Vatsya. You can go ahead, please. Amitav Vatsya.
Yeah. Thanks for the opportunity. Thanks for this wonderful performance, sir, and I hope to see you more frequently in such calls because it's help us understand the management.
Absolutely. Absolutely.
So I have one question with respect to your competitive intensity that you are referring to your competitor moving out of this cold rolled forming business altogether. So what stops other companies to get into this business? I mean, I understand their conundrum that you already mentioned that because of the logistics costs, it's not working out. But what stops other West Bengal or a Jharkhand-based company to do this?
See, I'll tell you what. There is a huge entry barrier in terms of the licensings that happen. Along with that, there are 8 or 9 players over the period of last 7 to 10 years, right? In the last 10 years, we've had, I mean, in the last 4 years, I think we were the last entrants, Cosmic CRF. The entry barrier is difficult. There's a huge entry barrier. There are reasons for that. The inspection is, why is inspection an entry barrier? Is because you are having to provide a very, very precision item over a period of time and provide that item from a basic infrastructure. Now, majority of the guys who are talking about CRF, there are other businesses that are easier to do. CRF is not a very easy business to do. Why? Because the manufacturing of 40 items, 60 items, 90 items, SKUs, and then providing an inspection for all of them and providing them all together as kits to railways, to wagon builders is not easy in its own right. Point 3. If somebody today goes and builds up a CRF unit, they are going to spend not less than 100 crores with the land, with the structure, with the shed, and with the machinery. I mean, I'm talking about legit machinery. I'm not talking about somebody who's collected parts from places and where you'll never get a precision item and you'll not even get a license. Like, I'll give you an example. Like NS Engineering in 2012 or 13 had tried for the license of railways, but they could never provide that precision because they had made all indigenous mills and indigenous manufacturing machines, which never really worked. Cosmic CRF, all its machinery has been made because it's made recently and it's been refurbished and the capexes have been done. So it's very in line with the new tech. And we plan to keep increasing the technology space. Also, the designs of the wagons keep changing. So every time a design changes, your tooling cost also changes. So when I talk about 100 crores, that's one time. Post that, you have to put almost 7 to 10 odd crores every year. Now tell me something. How much does a guy with 100 crores fighting the market, doing a precision business, doing a specific business make? And how is it so? What is the ROC there? What is the CAGR there for a new guy to enter here? Now for us, we bought this unit at 40 odd crores with already existing businesses and with a license that came in 2 months. And with the fact that I do not have to depend on other parties to get me the orders, because I'm already selling to these guys over the last 52 years, me or my past generations. I have been doing it for the past 13 years. So that is where the confidence comes through.
If I may ask another question.
Please go ahead.
So you mentioned this time about your spring business. That was not mentioned in detail in your conversation which we are having. So can you explain on your vision? Spring business?
So see, I'll tell you why haven't we mentioned this in length is because the guidance of that and the notification of that has been just mentioned in the board meeting yesterday when we were doing the board meeting and we were presenting the half-yearly results. The compliances of the same and the feasibility reports are being made and all the eligibility clauses are being fulfilled. That entire process of compliance probably takes almost 45 to 60 odd days. That unit, but if you want, we can always talk about it because the company is taking a call and we are going to buy this out. And this asset is going to come to us at dirt cheap prices because it's already held by the promoters. The promoters are not going to make money through that process. But at the same time, this product that we're going to manufacture, again, it's a very, very precision-oriented company, precision-oriented product. This is basically the cast-up springs. If you've seen a wagon, in the wagon you have a wheel set and then you have the bogie. The spring sets that are attached for the entire, suspension. The suspension springs, cast-up springs, that is what we are going to make. In a set, you need more than 32 types of springs for one wagon in one set. And you need 2 sets of springs in one wagon set. So if you need, for example, if you talk about a 75,000 wagon requirement at some point in our lives, say, let's say we talk about 75% discounted, 50,000 wagon requirement in a year. We are talking about a 1 lakh spring set requirement in a year. Divided by 12, we are looking at 8,333 spring sets requirement. There are 9 players already registered in the spring business, out of which Frontier Spring is also one. These guys are of the capacity of not more than 600, 700, some are 200, 300. The largest player that I know makes, I think, 1,100. So they are not being able to fulfill this requirement. There might be 1 more or 2 more spring players coming in, but there's a huge market there that we can do. The margins on this spring business is very big. The margins are much more buoyant than normal CRF business. So this adds value. Also, when we give the solution orientation, like from NS, we are providing solution orientation to infra, and we're talking about that. We want to become a solution provider to the wagon builder and the railways also. Even if we have become our own, we become our own wagon builders as well. I mean, we transcend into becoming our own wagon builders. Even then, that company will also be provided with the solution of CRF from all the products that it manufactures. So you don't have to go to many houses. You just go to one house like Cosmic CRF, and they, along with the subsidiaries, provide you everything.
Okay, wonderful. So it's a part of your vertical integration program.
We will not shift out of the vertical strengths. We are a engineering unit, and we will remain an engineering company, Cosmic CRF.
And is these springs are air springs or because some technology change has happened?
No, air springs had happened. It had happened. It went back to cast-up springs, and now the cast-up springs is a tried and tested item. So bogies can shift to air springs like BMBS. But when you talk about, say, a wagon like a box HL, BCN, HL, BOSM, BVCM, there are air springs there. Air springs there. The design is done. It's certified. It's been doing over the years. And also, I'll tell you what. Well, I just mentioned that there are a lot of wagons that are going to come for replenishment. All of them will also have a lot of spring business coming in. A lot of spring business.
Okay. Thank you.
Thank you.
We'll take last 2 questions, one from the normal window and one from the chat window. We'll first move to Chirag Nanda. Chirag, you can go ahead, please.
Yeah, thank you so much. I've been waiting. So it's a pleasure to listen to you always from the Alpha conference as well. Amazing energy and something I as a corporate try to imbibe in my team. So I'm learning more than the railway business here. And so pleasure listening to you. I hope you don't get frustrated in the ease of doing business in India. Honestly,
never.
I always think that's the only thing that can stop people like you. Because of course, India is nowhere close to where it should be in encouraging entrepreneurs like you and giving support. NCLT case is a classic example. And
it's a classic example.
My question, I had many actually, but a lot of them have asked. And my question is not more on the financials, right? So shouldn't we be looking at results as consolidated more as standalone? But what typically happens is the websites that flash all these financials, right? For example, Screener, everybody is a Hotshots website that everybody uses. they'll just compare standalone results, right? They'll show PAT based on that. They'll show revenue based on that. While I feel it should be consolidated, that should be put up because that's the true valuation of Cosmic.
Right, right. So I personally feel we should always look at the results of Cosmic CRF Ltd as a consolidated base. My reason of making a consolidation, I will not take over a company where I don't get more than 51% because I can't consolidate it. I will not want to buy it. I don't want to put my hand into it. My consolidation is my strength. So basically, we don't want to just keep buying items and probably building up the ground, those new facilities and new products and building new products. This is another reason for that. I'll tell you why. So I'll throw some light on this. This is operational requirement. Why do we buy more companies rather than making? So somebody could have asked me as to why don't you want to make springs in Cosmic CRF? Manufacturing it in Cosmic CRF, take a new place, put in the machinery. It is under the name of Cosmic CRF. The reason is the vendor, the buyer is same, but the buyer's terms of payments and the terms of dealing is different when it's a component, when it's a CRF. When it's a CRF, it's a safety item, which is RDSO recommended, and this item is not made by many people. So when you talk about a CRF, our payments are much more aligned. There's not much problem other than the prototype. We put our heads into it because we saw more margin and we didn't want others to enter. But that's just our disruption technique. So that's fine. That will get sorted out in the next 2.5 months. And then that kind of the data stretch is good also to look at. Somebody was telling me it's bad. I said, why is it bad? You have the buyers dependent on you. At the same time, they're going to buy more out of you. You're loaded up back for the next quarter to come in. Along with that, we don't do it because of the terms of payments. So for example, Springs is usually paid at 75 days in a normal level, 75 to 90 days. Whereas in CRF, you're getting payments in 15 to 30 days. So your entire cycle of working capital here is approximately 60 to 65 days. Whereas there is going to be approximately 90 to 120 days. 90 to 120 days to be precise. So that's one of the main reasons. Point two, when you are a component manufacturer, everybody in the class factor of the wagon builder associations, they will always deal with you like a component manufacturer. So back in the day, 5 years or 7 years before, like I'm talking about 2016, 17, a couple of companies like Titagarh or Jupiter were the only ones who were very, very aligned to taking debt from the banks and providing that kind of working capital to the business. But everybody else over the last 70, 80 years have lived on the money of the suppliers. The suppliers have given them the advances through advancing the material to them, and they've paid at their own whims and fancies. And that's how they still last. So we don't want to get into that. We want to do the business. We already do the business in other companies. Even when we merge them or we bring on these products, we will always open a new company. The book will be separate. But because I want to answer your question in direct, always look at Cosmic CRF with a consolidated statement. The numbers also that are going to double, that I keep saying about factor that we want to achieve double numbers in the tops and the bottoms, bottom lines and top lines, is on the consolidated level.
Yeah. No, absolutely. I've written to Screener because a lot of investor sentiment looks at valuation, and that would always be the case, right? And markets will get tighter.
I don't know why Screener gets against us. I mean, Screener, I think 6 months back also they had posted some rubbish, and then we had to write to them, and then we kind of changed it. My market cap looked at 800, looked like 800 crores when I'd already touched 1,000. I fell from the bed knowing कि 1,000 crore रुपए थोड़ा touch कर गए, 800 crore 2 महीने से दिखा रहे, लोग मेरे को फोन कर रहे कि भाई congratulations. This is Screener, bro. I have to meet the Screener owner. I'll come down to Bombay, meet him personally.
I'll keep writing to Screener in my capacity because investor sentiment gets impacted, right? 70 PE versus a 50 PE.
Screener is like Sybil. Screener is like Sybil. They'll play with you and then they'll give you the right point.
No, thank you so much. I'm hoping your CFOs will also interact with them and get it corrected because markets will get tighter, right? And here your company deserves the right investor sentiment. Your company deserves it, and I just want the right matrices so people make good decisions.
Right. Point noted. We'll get it immediately done.
Thank you so much, Aditya.
Thank
you. We'll take the last question for the day from Hanu Rao. It's a follow-up question. Hanu, you can go ahead, please.
Welcome back, Hanu.
Yes, it's a follow-up question. So it's like, you have a plan A and plan B, and how you are going to manage the debts for both the plans. You're going for any investor or maybe through banks or maybe internal accruals.
I think your voice got a little muffled.
I mean to say
what's your funding plan for all these acquisitions?
Debts.
Okay, so basically we still have cash on our books. If you can see the kind of funds that we've shown, we're carrying almost 40 odd crores of cash in our books. Along with that, we've taken the debt. Now, why have we taken the debt? We don't need the debt because this cash can be utilized for the working capital till such time we don't get the the acquisitions that we want to make. But we have taken the debt because it's very important on the operative level for us to have association and relationship with the banks. Once the financial institutions don't have an association with you, it's like you might be a good party, you might be a great institution, you might be a great company, but when you walk in, they don't know you. They literally don't know you, don't have an association. So that is why we started this business. Also because I had 20 crores of term loan from Kotak Bank when I had taken over this company, Cosmic CRF, like when I had taken over this asset in Cosmic CRF, I had 18% per annum because nobody was willing to fund it because this company was brand new, didn't do 1 years of balance sheet also, and was taking up such a big asset. So nobody was really ready to fund. So Kotak Bank took a leap on it, and they did, but at 18%. So I had to get one more bank and a PSU bank preferably to come in and settle this out and settle the scores. So they came in at 10%. Today they're at 9.5%. My debts will always, like the working capital is something that we are only going to get incrementally into, because once your turnovers keep increasing over a period of time, so it's increasing like every month on month, it's increasing. So when it keeps increasing, I personally believe 22 to 23%, not 25, not 20, 22 to 23% is what I want to cover in terms of my working capital. And at 22%, 23%, like say for example, if you're doing 1,000 crores, you need 220 crores. Out of which 220 crores, 25% will be my margin, or 30% will be my margin, if, as and when the banker is substantially comfortable. 70 to 75% will be the bank's margin. Banker's money is cheaper to me than my own money or your money. The reason being is very simple. For taking money out from the market, I have to dilute my own equity, and I love this baby more than anything. Why should I keep diluting it at no point and no certainty? Point one. Point two is, when we are carrying cash in our books, or somebody asked me, I think yesterday, that you're carrying cash in your books, somebody from the internal team, you're carrying cash in your books, and why do you have debt? So I have debt because this cash that I'm carrying for the last 2.5 months, because I am of the opinion that the day I get the opportunity, I will walk into that situation for the takeover that I'm mentioning again and again, and we will pay that cash down. That day, I will not have time for waiting for prefs and waiting for raisings and all of that. My bankers are ready because they've already loaned me almost 50 odd crores, out of which we are not utilizing that much of funds. So they've loaned me, they have an association, their relationship, and fix them up to give us a amount of money, which we will repay back once we want to come into the market and raise funds from all our friends.
So the current cash is sufficient for the takeovers, what you mean to say, sir?
This is my margin, sir. The rest of the money can come from the bank. We will pay them off in 1 year.
Okay, sir. Okay, thank
so
you.
my only clause with all the bankers are, आप percentage में 0.01% बढ़ा सकते हो, लेकिन आप foreclosure clause नहीं रख सकते मेरे साथ. मेरा इच्छा होगा तो मैं कल पेमेंट कर दूंगा.
Thank you.
Thank you so much.
All the best.
Thank you. And that brings us to the end of today's conference call. Thank you for all the participants for joining us on this call, and thank you to the management team for giving us their time.
Thank you so much. Happy Diwali to everybody.
Yeah, thanks, and wish you all a very happy Diwali. That brings us to the end of today's conference. Thank you.
Right. Thank you.